Hi, welcome to the Market Alert for Friday, the 10th of January 2019. So the stock melt up continues, as we've spoken about this week, and the most expensive since dot-com bust, which is way back in 1999-2000. Bonds are bid too, which has affected the yield, but we won't be looking at that today. Nothing major as far as changes with that are concerned. But I'll share this with you to start with. About why the printing of money from the Fed is finding its way into the stock market, and I haven't got an up-to-date one. I haven't got time to create it this morning, but you can create these free of charge from the Fred website. But you'll get the idea from this. From 2009, where we've looked at the monthly chart, you can see they started printing money in earnest. They printed 4 trillion on the balance sheet, and it found its way into the stock market. And you can see how both have tracked. This is not a recovery stock market. This is a Fed-led stock market that's been pumped higher, which you can see there. But I will find a more up-to-date chart, although I had a quick look this morning. It said they've stopped updating this particular chart because obviously they've started printing again, and it seems like they're hiding it. But I'll see what I can find. But it's a fascinating chart, and you'll see that when they stopped printing in 2018, how the market started to drop. So this is the life support. This is the heroin that is being pumped into the markets to keep it up. And it's continuing to do that. Make no bones about it. 30,000 is on the cards if they keep doing what they're doing at the moment. And you can see here, as soon as the market drops, they come in, they buy it, and the market is then sent back to the upside. And this is absolutely fascinating because all of this volatility here, where it was sideways, and then they came in and they brought the market back. It's staggering. You can see it here. And price is moving to the upside. They will not let this drop at the moment. And yesterday, again, same pattern. We come down to the 200 MA. We test the market. We see the blue test bar there. We see the market coming off the lows. Get the shakeout to begin with, and then off we go. Up 100 and plus points off this low. Great trades because there's such a set pattern to what they're doing at the moment. The market then retraces, which you'll see from here up to here. It comes down to 76%, or the area of, with the 200 MA, and then again we see from here to here. We come back to the psychological level. Just below it is the 76% retracement, and then the market gets back above the 20 bar moving average up for around 30 points, and then we get another retracement from, get the right one, from this low to this high takes you to 76%, and we get back above the 20 bar moving average with professional buying. A bit of profit taking there. The market's bought back into professional buying bars, and then the resistance is taken out with another professional buying bar. There's some resistance. This is going into the overnight now, but yet again the market is taken out by a buying bar and then drives higher. And overnight we see prices continuing to move to the upside, having traded already up to the R1 on the overnight, with some resistance there, and you can see some selling coming into the market at this level. But at the moment, it's a one-way bet. They're going to keep this going. The implied volatility is also showing this 1094 for yesterday, back below the 20 bar moving average now in the implied volatility, and this can be seen also in the color-coded one. We're back to green. So at the moment, everything to the upside, as it seems to be working that way for the Fed. I mean, the thing is, with technology these days, it only takes a couple of mouse clicks by the Fed to do what they need it to do. It's not a free market anymore. And like I said, I'm not complaining. There is a set pattern to what they're doing at the moment, and it's just absolutely brilliant. So long may it continue. I haven't got a problem at all. The volatility is just nice as well. Not getting whipped around too much in the trades either. So yeah, keep doing it, pal. It's fine by me. I don't have a problem at all. Meanwhile, Bitcoin isn't doing an awful lot apart from drifting down, having had a spike to the upside on the Iranian issues earlier on in the week, but now stuck finding a bit of support at 76.97, where the high was over here. But when you drill down into the chart, it's just drifting to the downside there and stuck in $100 range, apart from a bit of a shakeout yesterday, and then it only dropped $50 before they came back and bought the market and sent it back up. So again, not a lot happening in Bitcoin at the moment. Just very quiet and range bound again after that bit of activity that we saw earlier on last weekend and earlier in the week. And after that, it's now making its way back. So that's it for this one. Let's see what happens today. Of course, just before I do conclude, it's a big one today. We've got the non-farm payroll figures today. So let's see. You couldn't make this stuff up. Forecasted 162, previous 266. We know what they did last time. They threw in a low figure on the forecast, and then it came out massively higher and allowed the market to move higher. So yeah, I mean, we can see exactly what they're up to with regards to all of this. So let's wait and see. So we may get a pullback before prices then move higher at 130 following the release of the non-farm payroll figures. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.